Hey everyone, welcome back to Corporate Dakota, the place where we try to make sense of the messy paperwork that big companies leave behind. But sometimes they really leave us scratching our heads today. We are diving into a rather interesting report from Relativity Accession Corp that has some key changes and quite a bit of financial movement we need to unpack. Let's cut to the chase. Relativity Accession Corp, the company as they call it here, had a special meeting with its shareholders on the 12th of February 2026. The big news is they managed to get their stockholders to agree to a rather important change to their foundational document, the Certificate of Incorporation. This amendment essentially gives them more time to do their primary objective, which is to find and buy into another business, or what they call their initial business combination. This amendment pushes back the deadline from the 15th of February 2026 all the way to the 15th of February 2027, so they bought themselves a full year to make something happen. This is a pretty common move for special purpose acquisition companies, or SPACs. Like Relativity Accession Corp, they are essentially shell companies that go public to raise money with the sole purpose of acquiring an existing business rather than operating one themselves. When they can't find a target company within their allotted time, they have to start returning money to investors. So this extension is a lifeline. Now let's talk about the vote to make this extension happen. It shows that over 33 million shares were represented at the meeting, which is great because it means they had enough people voting to actually make the decision count. The vote passed with an overwhelming majority. Over 33 million shares voted for it. Only about 4,300 voted against it, so the shareholders are largely on board with this extra time. But here's where it gets really interesting and frankly a little concerning in connection with this meeting. A number of shareholders, those holding over 6,500 shares of the company's class, a common stock, decided to cash out their investment. They exercised their right to redeem their shares. That means they asked for their portion of the money the company had raised and kept safe in a trust account. This redemption cost the company about $84,172, which is around $12.77 per S-hair. After these redemptions, there is still a substantial amount of money left in the trust account, over $714,000. This means that while some investors lost faith or decided to get out while they could, there are still plenty of shares left and a good chunk of money remaining to fund the search for that business combination. It is worth noting that Relativity Accession Corp is identified as an emerging growth company. This typically means they are newer to the public markets and have less stringent reporting requirements, which can speed up their growth and innovation phase. However, it also means they might not have the same level of established financial stability or a long track record to rely on. Looking at this from a broader perspective, this filing signals a company that is in a holding pattern and is actively trying to survive to see its acquisition through the extension. Is a positive sign that management believes they can still find a deal, but the redemptions are a clear indicator that some investors are not as confident, or perhaps they have found better opportunities elsewhere. Ray. For a SPAC, every day without a deal is a day closer to dissolution. So this year of extra time is crucial. They need to find a viable business to merge with quickly before more investors pull out. And the capital dries up. Their strategy here is simple survival and finding the right merger target to make it all worthwhile. Now for my take on this report, Relativity Accession Corp is facing the classic SPAC challenge. Time is running out and investor confidence seems to be wavering. Although not entirely gone, the fact that they needed to extend their deadline suggests that finding a suitable business combination has been more difficult than anticipated. The redemptions are a warning sign. They're essentially betting on themselves to pull off a successful merger in the next year with a significantly smaller L of capital if more shareholders decide to leave the key for them. Now is execution. They need to announce a compelling deal that gives investors a reason to stay invested and believe in the future growth of the combined entity. The biggest risk here is failing to find a deal at all, which would lead to liquidation and investors getting their money back minus any immediate expenses. The opportunity lies in finding an undervalued gem of a company to acquire and turn into a successful public entity. Alright, that is our breakdown of Relativity Accession Corp latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.